Okay, so welcome everyone to the first event of Dripper Startup House in collaboration with Bongo Hive. And the event today will include first a panel discussion on the topic of startup ecosystems around the world. We have our panelists joining from from Africa, Simunza here from Zambia, Francis from Tanzania, Ryan from South Africa, and Juliana from our fund. She is currently in Latin America, and Aaron from Vietnam. So Dripper Startup House, I just want to say a little bit about Dripper Startup House. So our mission is to have enable 1 million businesses worldwide by 2030, and we are here collaborating with Bongo Hive in order to achieve that goal together. So the panel today, oh, I'm sorry, your name. So before the event, I messaged all of our panelists and I asked them one question. If there's one thing you can tell me, if there's one thing that you are working towards, what is it? So this is their answer. So Simunza tells me the one thing that he's working towards is to cultivating a thriving ecosystem for startups in Southern Africa and helping founders to find innovative solutions for the continent. But Ryan, he tells me he's focusing on many things, but one thing he really wants to do is to facilitate more openness within the agri-tech ecosystem on the continent, to sharing lessons, insights, and failures around what it takes to build a truly scalable agri-tech business model. Francis, on the other hand, he focused on empowering young people in their journey towards building inclusive economies and fostering sustainable communities. And this is Juliana. She wants to elevate local startups and put them on the global stage through cultivating Dripper Startup House venture with the most diverse portfolio the world has ever seen. And Aaron, he just stepped into his new role with Dripper Startup House Academy, and he's currently working on products for Dripper Startup House Academy that focus on entrepreneurs creating great teams and optimizing their performance. So that's our panel for today. So our topic for today is ecosystems around the world. Before we start this event, I was doing some research on ecosystems around the world, and it turns out last year was a record high funding year for all ecosystems around the world. As you can see here, startup funding triples to a record of 15 billion in Latin America, and African startup inflows in hitting record of 5 billion, and Asia also shatters record. So yeah, it was a bit confusing for me. So yeah, then we're gonna talk about this, why, how it leads to the fact that startups ecosystem around the world all reach record high in terms of funding. So now panel discussion will start.
So just a bit about Bongo Hive. We say we work with great minds building viable solutions that will change the world. And the idea behind the words that we use in that phrase are to build viable solutions. We believe that you have to be seeking to address challenges that are common to the people around you, or Africa, or a place like that. And you can't do it on your own. That's something that we've discovered over the years of the last 10 years of building Bongo Hive. So the great minds that we talk about are everybody from the founders of the startups themselves, the experts that provide them advice, mentors that work alongside them, and investors. There we go. So it's you need an ecosystem of everybody to get started. But I'll hand it over to Fawn now so that she can get this party started.
Hello. Thank you for saving the show. So let's start with you, Simunza.
I just said a bunch of things.
Yeah. So I want to start.
But what's your question?
I want to start with a question for you. So recently there have been a lot of news about Zambia wanting to transform into Africa's low-tax startup hub. And you mentioned you were in a meeting with people who were trying to push this to happen. What is your insights? Can you tell us?
All right. So the idea is taking a look at a couple of things that hopefully a couple of things that lend themselves towards what a healthy ecosystem would be for startup founders to be able to work in, realize what the opportunity is for what they're building with regards to getting in the initial stages after you release your prototype and you want to get feedback from customers and initially and at the end of the day scale out. We found that there were a couple of advantages that we had looking at what was going on the continent over the last couple of years. So let's talk about, for example, in the area of fintech. A few years ago, we ran a program that supported early stage enterprises that were building financial solutions for the mass market. And whilst doing so, the partnership that we developed involved UNCDF, the United Nations Capital Development Fund, the Securities Exchange Commission, the local Securities Exchange Commission, and then the central bank. With regards to trying to figure out what is it that founders needed to know as they were going out to build fintech solutions, and how do you bridge the gap between their understanding of regulatory requirements and everything else that they need to have in place to deliver their solutions. And we found that the regulators were pretty keen to see new solutions come into the space. So in that process, we launched what we called a playbook, a regulatory playbook. The regulators launched sandboxes that allow fintechs to new ideas in areas where there's no regulation around to at least get like 2 years in which that they can operate before the regulator can then create new licensing or new regulations around what they're trying to do. So comparing that with other I'm losing my voice. Comparing that with other markets, we found ourselves in a place where we said that, and also the stability of the country, you look at a general climate as well, where the government over the years has worked towards making it easier for people to start businesses within the country, and a number of other policies that were falling into place. We thought that great. Zambia, for intents and purposes, even though we like to complain about it, is a great place to get started. And talking to other founders, we validated this by talking to other founders and having friends like other people who are in the ecosystem, like Muya Msokotwane, who's building Nkwashi, an explorer school, Precious Mlambo, who's building out Union 54, another startup. Started something called the technology working group for technology sector working group for Zambia, and reached out to a whole group of mostly fintech founders to find out if you had the opportunity and the government was willing to listen to you, would you consider Zambia as a place to employ people or move a team to and get to work if the government allowed policies that I would do so? And they said yes. So we tried to get an ear from government, and government came to the table and said, we're willing to have a conversation and see what would make Zambia an attractive place for founders to come to. And that launched the conversation around what would it be, you could call it a moonshot. That launched the moonshot towards what would it be to build a thriving ecosystem in Zambia. And we're fortunate in this case that the government is willing to listen to us as that unfolds.
Thank you, Simuza. Aaron, I know that you came to Vietnam from 18 years ago, and when Vietnam had no startup incubator at all, and you co-founded Vietnam's first startup ecosystem. And now Vietnam is considered one of the, Vietnam is considered the powerhouse or the new tech hub of Asia or Southeast Asia. So Vietnam has come a long way. What do you think the government did right, or what happened there that make that change happen? Can you tell us?
Yes, I can. Can you hear me okay?
Yeah.
Great. Yeah, a lot of change, but let's remember still 95% of the population is rural. So, while there is, these rapidly growing urban hubs, still it's a lot of farmers. And so I think that sometimes the tech startups are ignoring what might be right under their nose, agriculture and agriculture technology and so forth. And then the other major industry here, of course, is outsourcing and manufacturing. And so Vietnam, being an outsourcing nation, has kind of entered into an interesting phase where the outsourcing company owners have been really at the bottom of the chain. Some Vietnam outsourcing companies are outsourced to by Japanese outsourcing companies who are actually taking their orders from the US and Europe. And they have to do this white label outsourcing. They can't even take credit for the amazing coding that they're doing. But what's happening now is the outsourcers are, observing the tech industry and watching entrepreneurs, and they realize that I've been making products for all these companies overseas. Now I can make my own product. And so now we're seeing these amazing products coming out of Vietnam that are being built by teams that used to be in the outsourcing industry. And I think that's why you're seeing this kind of like new wave of products coming out of Vietnam, especially blockchain. And the other thing, as manufacturing is moving into Vietnam from other places where the labor is higher than Vietnam, a lot of manufacturing is moving here. And so the supply chain logistics industry opens a lot of opportunities here.
Okay, I see. And are there any lessons that you wish you had known from the first days of Hatch? Like, now looking at Vietnam right now, what do you wish you had known before?
Gosh, I love this question because it gives me a chance to tell people who are starting out with what they might do differently. But even though I think everyone has to learn their own lessons, but still, I think I would move faster, think bigger. Conquer fear. If you're afraid of something, you have to do it. And I think one thing that I was maybe a little bit naive entering into the business world from the creative world is the importance of leverage, the importance of signatures and contracts and turning talk into action, paper, leverageable paper, and so having conversations, have your agreements over coffee, but then be in touch with paperwork right away. And if you can't get paperwork, just move on, find another partner. And the last thing would be to understand culture. I did read an amazing essay about Vietnamese culture, which was really important for me to understand the business culture. And I think that's so important, especially in, as you think you want to cross borders, you got to understand the culture of the target country. And there's heaps of books and information on cultural differences. So I think you ought to study them so that you don't make mistakes, like playing with your food with your chopsticks, which is something I did once at a Korean meal, and I got a lot of funny looks.
I'm losing my voice. Okay. So Ryan, now that Aaron just mentioned about crossing borders and understanding cultures in order for startups to go abroad, I think we talked about this during our brief call before this panel discussion. What are your thoughts about how African startups can think from the beginning of their journey in order to make their cross-border journey easier?
Yeah, that's a really important thing to think about. When conventional wisdom sees Africa as a kind of as a country in itself, but in reality, you have massive diversity at a monumental scale. And unfortunately, many startups are born in a bubble on the continent, and as a result, end up solving for very localized, hyper-localized problems with very hyper-localized solutions. And in turn, when scalability is brought into the question, it becomes increasingly difficult for those very startups to think about what it takes to make their model transportable or replicable in another market. And I think, particularly in spaces like ag tech, it is incredibly difficult to manage that tension between being locally relevant in order to build your initial base of customers and your initial proposition, but also to be globally scalable. And I think that's essential. Unlike a lot of other developed economies, there just isn't enough buying power in an individual African country to constitute a unicorn in many instances. And one needs to think about continental growth as critical to scale. And that in itself brings a whole variety of challenges. But ultimately, what I think is really interesting is how do you enable founders or burgeoning entrepreneurs to explore the continent, not just their own backyards, and understand more broadly, what are those universal problems that transcend individual countries, into individual value chains, individual commodities, whatever it may be, and use that to build more globally relevant or continentally relevant startups. Hope that answers the question.
Thank you, Ryan. And also, you were mentioning to me you have experiences building ventures and also investing in Western, Central, and Eastern Africa. Can you tell us about some unique markets over there and how the markets are connected?
I think, again, countries like Uganda and Kenya, although bordering one another, are so vastly different from one another in terms of local dynamics on the ground. But there is some commonality in these regional areas. You think about the East African corridor, you think about SADC, you think about West Africa. There are some commonalities. But what is really exciting is, we are starting to see a lot of initiatives on the continent that are driving better kind of cooperation between countries. We've got the African Free Trade Agreement, which is, something currently in the works now, which is there to encourage, increasing cooperation and trade between countries. But at the same time, we still do have these, very distinct cultural economic bubbles when we talk about West Africa, when we talk about Francophone Africa, when we talk about East Africa, North Africa, SADC. And the hopes is perhaps technology is a means to better transcend some of these boundaries and some of these kind of silos that exist. But ultimately, Africa, very diverse continent, lots happening on the ground, and we really need to build a new generation of African entrepreneur who has a more worldly view of the continent and I guess some of those more overarching global problems versus being too focused on what's happening in their backyard, in their city, in their town, in their village, whatever it may be.
Okay, and Francis, I knew that you were just having a regional tour around Tanzania, Rwanda, Uganda, and Kenya. What do you think about what Ryan just said? And how was your tour like?
Hi all, I hope you can hear me. Okay, yeah, so basically I'm still in Uganda here and also enjoying the ecosystem. I've been working around the East African ecosystem, and I see it's a very very diverse ecosystem, even if they are in the same region. So I see like the dynamics are quite different. Coming from Tanzania, where the ecosystem is still at the nascent stage, people are trying to build like, investable startups. There is a lot of, donor funds instead of like VC funding. So those kind of things are, still trying to develop the ecosystem. Then going to Kenya, where there is a more matured startups and more matured ecosystem and more deal flows. So it comes with a different dynamics at that point. Also, we're also in kind of Rwanda as well. We see what I enjoyed a lot about Rwanda is the environment, the startup environment. The government had made like the regulatory process is very seamless for companies to actually run businesses in Rwanda. So I mean, that is something that most of the ecosystem have to emulate. To be able to make sure that there are no governments, there are no regulatory challenges or stiffness. This is one of the biggest things that actually, based on what Aaron was saying, Ryan was saying, this can actually stop most of the startups from being able to expand from one country to the other. And also coming to Rwanda, I'm quite surprised, leading a panel here, I see a lot of these startups, really very resilient founders in Uganda, even if the environment is not as friendly as Rwanda. But I see a lot of startups that are really are building something very, very scalable and something that is actually solving like the most fundamental challenges which are very regional problems, regional challenges. So I see like that kind of opportunity for companies or startups to actually go around the region or even scale out across the region. So talking about people like Lipalita, that are in Kenya and Uganda here, talking about Tubaya and this kind of startups that actually, being able to identify a common ground for, a common solution, a common kind of challenge around the region and able to build a solution around it. So I think most of the founders are very regional focused.
Thank you, Francis. So Juliana, so we know that you've been in Latin America for a while. So Juliana is from the US and she's currently on the ground in Latin America to invest in Latin American startups. And we also, so what do you think that now you've listened to to the panelists talking about African markets and Aaron talking about Vietnam? So yeah, tell us about Latin America and what you see, what you can imagine about creating the most diverse portfolio in the world.
Hey, Fam, thanks so much for having me. It's great to meet you all. Can you hear me okay?
Yeah.
Perfect. All right. So I think for the most part, previously I was based out of Singapore before the US and got to know the Southeast Asia market as well as working in Europe for a while. Not Africa, not yet, but I hope to be there soon also. But I think for the most part, Latin America is unlike any other startup ecosystem that I have ever seen. And what I mean particularly by this is that every country down here, has very, very specific challenges in regard to currency, to government, to inflation. And if you hear about the Fintech boom down here, I think it would take about 2 or 3 days before, you have to go meet a man with a money jacket to exchange currencies on, the illegal exchange to understand, what's happening in Argentina and Venezuela and how difficult it is for these founders to scale startups. I think for the most part, the most enlightening thing for me for startups down here is how resilient these founders are. It's kind of a common joke that if you can, make it in Latin America, you can make it anywhere. But the catch-22 of that is, Brazil is the largest country down here, but it's also Portuguese while everything else is Spanish speaking. So expanding is just, difficult to say the least, but, these founders are really resilient and working on very interesting problems.
Are you currently in Argentina?
Yeah, I'm currently in Buenos Aires, Argentina.
And you are working, I heard you're working with a lot of founders currently in Argentina. And,
yeah, so
yeah.
Yeah,
Sorry, I did not mean to ask you other-
No worries, no worries. So we currently have a Draper University cohort in our Draper space in Buenos Aires. And so there's about 15 founders here who are going through the program. And essentially we're here to help support, mentor, and essentially, help these founders raise funds, either in Argentina or across borders in neighboring LATAM countries. So it's been a lot of meeting investor partners. We essentially went on a roadshow, and I had 12 meetings in a day with various VCs to understand the landscape, understand what they're investing in, what they're looking at, where they're getting their deal flow. And I think the founders, we're seeing a lot of fintech, we're seeing a lot of marketplace. Our Draper fund Cygnus, they do deep tech and space tech and invest in Latino founders. So I think for the most part, seeing some really interesting stuff. There's definitely a gap between really early stuff and then later. It seems a lot of the VCs are follow-ons. They have to have the first investor, and for those pre-seed, seed stage companies, they're really suffering. So that's what we're here to invest in and really look at these founders. I mean, at the end of the day, in venture, it's risk capital. And I think for the later stage, and pre-series A, for all of these funds to be following on. I don't know how much risk that is, especially when they've had a decent amount of traction, but the earlier companies, definitely, that's what we're here to help support and help fund as well.
And I just figured out today that the biggest IPO on New York Stock Exchange ever since Snapchat in 2016 is a Brazilian fintech startup. So yeah, tell us about it.
Yeah,
About the
so
fintech scene over there, as you already mentioned. Sorry.
Yeah, so fintech, I think for the most part, fintech is something that is quite complicated here. There's another company that's doing really well called Lemon Cash. What really is the challenge for a lot of these countries is, the fact that their currency, as soon as they have it, whether it's out of a bank, whether it's out of the blue exchange, especially in Argentina, or the legal exchange, depending on where you get it, your money could be half as valuable, compared to other methods or using crypto. And you hear a lot about the crypto scene down here because, essentially there's not a lot of other options. And if there are a lot of other options, you're getting ripped off. You're losing half of the value of your currency in your pocket. And so, the fintech scene is also really dangerous to build because things change so quickly. So if they're able to figure it out in Brazil, or if they're able to figure it out in Argentina, scaling that across, to Colombia, to, the common path is, Argentina, Mexico, Colombia, Brazil, because those are the largest amount of people in these countries. But, to take this product that you might build in Colombia and bring it to Brazil that speaks Portuguese, completely different culturally, again, is super difficult. So the fintechs that are, doing really well are those that are able to help secure, a little bit higher value for their currency to help instantaneously exchange it to crypto, because alternatively, the crypto adoption for merchants on the merchant side isn't as widespread either. So there's a bunch of problems to be solved, which at least is opportunistic in the sense that, there's a lot of founders that are working on them. And, pretty much is why I'm here, and why, the Draper Startup House team is here, and why we hope to sort of help fund them and support them on their journeys.
Thank you, Juliana. Talking about fintech, so I'm from Vietnam, and Vietnam is the country with, I just figured out today that Vietnam is a country with 40 different e-wallet systems. So if you go to a coffee shop, you can see like 10 different signs of QR code that you can pay with using the different e-wallet mobile money app that you have. So it's really fascinating what is going on in Vietnam. So Aaron, can you tell us a little bit about the fintech scene in Vietnam?
Sure. I read some stats on this recently, and in Vietnam actually has the lowest cashless transaction rate in the region. Ironically, it has 39 e-wallet licenses. So there's kind of a disconnect between the actual demand for e-wallets and the optimistic players in the startup ecosystem. So, and those who have big user bases, they may have an advantage, but even when I think we have to look at active users versus people who have just signed up and opened a wallet and never used it or don't use it very much. Those numbers are kind of hard to come by, the actual active users. That the numbers are really closely held here. It's not a very open, people are just not open with their numbers. But let's zoom out. Every industry has periods of expansion followed by consolidation. So it's looking, like those that are, those with the bundled services, i.e. traditional finance and banks, are definitely going to be threatened by the unbundlers. It's just a matter of time. The entertainment industry is a classic study on this topic. But, really in Vietnam, there's a delicate tango dance between the normies, the established industries, and the startups. And the startups that could disrupt their business model. So the sharing economy has done well. We have Uber and Grab came in here and did very well to disrupt the taxi industry. And the taxi industry, they put up a fight, and it's political. It's involving the government, but interestingly, what wins is where do people put their money. So one thing that's kind of interesting, and it's just like there's an iceberg under the ocean here. Vietnam is the number 4 country in the world holding cryptocurrency. Like it's huge, and all of the people who are holding it are having their little secret groups, Telegram groups, Zalo groups. And it's all under the radar of regulators and everyone. So it's going to be interesting how this plays out. So, but I think if you do have a fintech project that isn't partnering with someone who can advocate for you in the political realm or the big business sphere, you're at risk, because at the end of the day, those players have a lot of leverage in a country, especially a single party country. But at the end of the day, for any startup, it's all about brand building, and it's about having a great user experience. The user experience of the e-wallets that I've played around with in Vietnam leave a lot to desire. So yeah, so someone ought to grab onto one of those licenses and build a better user experience. It might end up winning.
Thank you very much, Aaron.
Yeah, my pleasure.
Ryan, as we've been talking, as we've been mentioning about specifically about fintech around the world, and you, on the other hand, are focusing on agri-tech. Is this why is that? As I understand, fintech is the most funded. Fintech startups are the most funded in the whole continent, right? So is that why you are diverting your focus to agri-tech startups?
I think, interestingly enough, when we talk about agri-tech on the continent, more often than not, we're actually talking about agri-fintech, in the sense of that intersection between the value that fintech provides, but being able to channel and focus that into an agri-tech context. What is, I think, really exciting and challenging about the agri-tech space is because it is new, it's still burgeoning, it is still nascent. There are very few benchmarks, examples available on the continent for what scalability might look like in an agri-tech context. We have a number of fintech unicorns already on the continent who have demonstrated real scale and in many ways de-risked fintech as a channel for investment. But agri-tech is still new. There aren't a lot of scalable models yet. No one has really cracked a scalable business model in this space. There are some that have gotten close, and there are some that are getting close, but for the most part, it is kind of uncharted territory, and in many ways, that's what I find the most exciting about it. And I think the ability to create impact in an agri-tech context, I think, is exponentially greater than that of some of the purebred fintechs that we see today. But again, the handful of agri-techs that are achieving significant scale on the continent are in fact hybrids. They are hybrid agri-tech fintechs. And if you think about Apollo Agric, a Kenyan agri-tech that just completed a massive raise, they are in many ways a micro lender. That is their bread and butter. They have just focused exclusively into the ag-tech ecosystem.
That's a very interesting perspective. And when you were saying that, Simunza was whispering to me, all African startups are fintech startups. Why do you say that, Simunza?
All right. It's not as simple as it sounds. So, but if you look at, it really comes down to fundamentals, really. And the fundamentals are that you need to be solving the problems that actually exist, and to do the things that we want to do, you need to lay down the infrastructure that allows you to get to the next step. So we like the idea of leapfrogging, but you have to be at a certain base that allows you to do. You have to have certain things in place that allow you to do the next thing. So so when I say every African startup building out a solution at the moment is ultimately still a fintech, even if they mask themselves as something else. So let's talk about retail. So we talk about the Twiggers, we talk about everybody else and all kind of stuff. They've all plugged in fintech services into what they're trying to do, because to achieve the numbers that you're trying to get to satisfy the customer that you're trying to satisfy the need of the customer that you're trying to assist, help, or fulfill their desire, is ultimately you have to unlock, for that growth to happen, you have to unlock their access to finance, their access to credit, or access to something else, and you have to provide, and you find that the traditional financing models will not do that, and it then becomes you providing that service within what it is that you're doing. So you could do education and then find out that the parents can't afford to pay the school fees. So then you ultimately then have to build in a service that allows you to then finance the parents to be able to afford the education or the solution that you're providing. So you're ultimately also then providing a fintech service in what you're doing. But once again, I say it's because the fundamental rails themselves that would say, okay, great, here are the financial solutions that everything else can plug into. What you had banking services in economies, every other business model could say, okay, great, we can borrow money from the bank. So what we're seeing on the tech side is we're building solutions that then talk to customers that need financing, and then you now have to build the financing to be able to solve that solution. Once we've sorted out access to finance, then you can start to build out everything else and decide whether you want to become a pure agri-tech, pure ed-tech, pure legal tech, whatever it is that is on your heart's desire that pleases people at the end of the day.
So I just read an article recently about how some giant fintech startups in the continent, especially from Nigeria, they want to grow presence in Zambia. What makes you think make Zambia an attractive market?
Yeah, that will shock you, because let's say, okay, great, let's do the numbers. Zambia is a population of 19 million people. So it doesn't make it. You look at, okay, great, Nigeria, approximately 200 million people, and then they're interested in hopefully why are they looking at Zambia? And it's not because the population is what's attractive to them, it's the environment that is attractive to them. You've got electricity, yes, and we're sorting out the whole load shedding thing. That's in works. Yes, and we're getting somewhere. I know we laugh, but we're actually getting somewhere. If you have consistent electricity, you have a consistent environment where your team of developers are not being harassed by police. You've got a regulator who's not changing their mind every 3 months about whether or not you can use this platform or that platform. You've got banks right now that are restricting your movement of the dollar, whilst banks in Zambia just like they don't care, they don't mind, and all kind of stuff. It's the small things that you're not looking for, that we take for granted, that make Zambia a place that other countries are looking at, or founders in other places are looking at and saying like, hold on, we can actually build companies in a country like Zambia and look at the outside market and scale out to the outside market, and not have to worry about a regulator that's beholden to one side of the industry, because the regulators keenly and very, very keenly interested in financial inclusion across the market. And therefore, and you don't have one telco, for example, that says, okay, great, my mobile money is king in this place, so I'll set the rules. All three players can play can play, and it's fair competition amongst them without the regulator trying to back any one of them. So it's all those nuances that founders are looking for, or companies are looking for rather, that say, okay, great, can I be in one place and not have to worry about? I need to worry about whether I'm fundraising. I need to worry about whether customers are buying my product. I don't need to be worrying about whether the government is also after me and changing the rules whilst I'm trying to, whilst I'm trying to build my company as well. So it's things like that provide stability, and that's why you're finding that some founders are looking at Zambia.
So Ryan, again, another question for Ryan, because I'm just curious. You are from South Africa and you are quite close to Zambia geographically, but you have been working mainly up in the West, Central, and Eastern Africa. So what stops you, or why haven't you been involved in this market earlier, and why are you interested in it now?
I think in many instances it comes down to perceived, risk and risk adversity. In many ways, markets like Kenya, Nigeria, Ghana, Egypt are a kind of low-hanging fruit, for flows of capital, because startups have already managed to demonstrate scale. The environment has already demonstrated its kind of conduciveness to startups. And Africa as a continent, viewed by, Western economies, is perceived as high risk. And in many instances, these countries, Nigeria, Kenya predominantly, Egypt predominantly, have served as a kind of launch pad into the continent, for investors, for startups, kind of dipping their feet into the African market. But what I think is exciting is that these economies, these markets are, it's no longer a seller's market. It's no longer a buyer's market. There is a saturation of capital in these markets. Startups investments in startups are becoming increasingly more expensive, especially if you're wanting to get in early, and so forth. So, as these markets become increasingly more saturated with capital, startups, etc., it makes sense to start pushing into the frontier markets for startups, where you can get in on the ground floor, and you can invest in startups a lot cheaper, if that makes sense. So things are changing, and that's exciting. I think Kenya, Nigeria, Egypt, etc., have served as the great kind of beachhead into the African continent for for VC funding, etc. But those markets are now saturated. It's very difficult, as a founders factory where I come from, as a fixed ticket investor, we invest up to $250,000. We expect a range of equity in return for that. It's very difficult for us to invest in startups in those markets. Their cap tables are massive already. You're seeing startups that are raising pre-seed, seed rounds that just exceed our capacity, and that's fine. And that's great for those markets. But for us, pre-seed, really early stage investors, willing to take higher risk, we've got to start looking at some of the more kind of frontiered markets which aren't saturated yet. And I look at some of the numbers, just sitting in earlier on some of the practice rounds of the startups, and how these startups have managed to achieve so much traction so quickly is really exciting, because they are first movers. They are first movers in these markets. And same goes for Nigeria, Kenya. A lot of funding is flowing into payments, into credit-based solutions. We've talked about fintech, and I find it very difficult to back new startup trying to compete with the big players in these markets, because the competition is just so big. So in short, very difficult for newcomers into these big markets, whether you're an investor or a startup, because of how competitive these markets have become. And I think it's exciting to see attention shift to the newer, less, in inverted commas, less mature startup ecosystems like Zambia, like Senegal, like Rwanda, whatever it may be.
Thank you. And Francis, would we consider Tanzania a frontier upcoming market as well? And I know that you've been working for a long time with startups in Tanzania and helping them grow and scale. How do startups in Tanzania start with a mindset to grow to scale regionally to other Eastern African countries?
Yeah, so my own experience working here, like I mentioned, Tanzania is like a nascent ecosystem, but there's a very huge potential here. We've got at least 2 startups from Tanzania joining Y Combinator in the past 3 years. So it shows like, it's a promising ecosystem. And we are currently, what we do in ecosystem is we're trying to kind of change the mindset of the startups to start building for, building to scale, trying to look at or identify like building products that could actually be able to still remain relevant in Kenya, in Rwanda, in Uganda, even across East Africa. So even some of the startups in our portfolio, like one of our portfolios, Geeks Africa, they're already in Kenya market and also in Nigeria market. So that shows like, there is opportunity for startups in Tanzania to also be able to compete across the region. So it give you like 2, 3, 4 years, Tanzania is going to definitely be one of the ecosystems to look after for.
Thank you. So we have 10 minutes left for panel discussion. Is there anyone in the audience online or offline want to ask any questions to the panel? Yep, I think that conversation on the chat is like history. Can you look at the chat? I think it was like Ryan was saying about chicken and egg when Simunza was mentioning the ecosystem in Zambia.
Yeah, would you like me to elaborate on that?
Yes.
Sure. I mean, I think that point around every startup is a fintech, I think is such an important one, because buying power is a real problem on the continent. Buying power is a real problem on the continent, and being able to create incredible value, whether it be for consumers or for startups, isn't enough. One needs to figure out ways in which that value can be affordable. It's see a lot of agri-techs who have incredible value. They've developed brilliant solutions, but smallholder farmers can't afford them. And one needs to figure out ways in which to embed finance, into your products to enable the consumer or the business to unlock that value. And I think it really is a chicken and egg race around, finding the right balance between value creation and value consumption, with financing, payment rails, etc., being the means for unlocking and consuming that value.
So there's one person in the audience here who would like to ask a question. Yeah.
Hi, my name's Elijah, and I have a question about interoperability and scaling across continents. So, I started a startup that actually applied to pitch today, didn't make it. Kind of sucks, but that's okay.
You want to pitch now?
No, but this question I think will be useful to everybody in the room. But basically, so I started a fintech to try and use data analytics to help startups raise capital globally. And I was just thinking, oh, now we got the blockchain, this new permissionless system that enables for capital to flow globally over the internet. So just like the way you can build a social media following, you can raise money over the internet as easy as a like. But I came across this challenge of when I was trying to build my own startup, I tried crowdfunding and I had to get a guy in the UK to open a GoFundMe account for me to raise money for it. And I was just like, ugh, the regulations and the rules around this are so crazy. So what happens if I do create a method for startups to raise capital over the internet using the rails of blockchain and crypto, and then I get slapped with securities regulation and I'm issuing unregulated securities? Everybody says it's better to ask for forgiveness than for permission, but when it comes to security regulation, I don't think you want to ask for forgiveness when you've issued unregulated securities, because the governments take this thing seriously. So if you're an entrepreneur trying to build something on a blockchain, how do you go about it with the fear of regulation kind of like looming over your head?
Who do you want to answer this question for you?
Anybody who's working in any space with blockchain and crypto, anybody who has insights on where this can go. So it's really open to the panel, because I mean, if you're looking at blockchain and crypto and fintech, it's all kind of one of the most trending topics.
Anyone on the panel wants to answer this question?
I'm happy
maybe
to. Oh, go ahead, Aaron. Go ahead.
I was going to say, Fung, maybe you could summarize his question.
Yeah.
So his concern is that for the solution he's trying to build, with the finance sector being largely regulated, how would he test his solution out in the market before getting licensing, or with the possibility that the regulator might not give him licensing for what he's trying to do? So he's seeking advice around that.
So it's an interesting question, and I think it's really relevant today. Since I'm on the camera, I'll just throw in my opinion. It really depends upon where you're operating, and maybe you want to just operate somewhere where you don't have the problem. Don't create trouble where it isn't necessary. Now, if you can't do that, then it's a big world, and you can go into the Draper Entrepreneur Network, DEN, and you can find collaborators in a country where where you don't have these issues, and work remotely for that team. I don't know, that's my idea.
I'm going to add to that. I don't know of any countries yet that have a problem with the blockchain. Since you used the word blockchain, I'm going to use the word blockchain. I don't know any country. So even with Zambia, there largely is no problem with the blockchain itself. And I think people are mixing up the central bank's comment on cryptocurrency not being legal tender, which simply means you cannot legally use cryptocurrency to pay for a good and then claim that it's illegal to then come and claim, okay, great, I paid Elijah using Bitcoin, and they'll be like, yeah, but we don't recognize that. So but if you use blockchain as a technology for your solution, and there are a number of startups that are already considering, for what I understand from Zambia is that either regulator doesn't care at the moment. What they're interested in is how the solution works and whether you've got the actual you've actually ticked the boxes that make sure that the consumer at the end of the day is protected, and that there's recourse for the consumer if anything goes wrong, to be able to get back to you to make sure that anything is resolved, and the communication and all the other stuff is in place as it would be for any financial institution. So, but yeah, if you're building outside of Zambia, I can't answer for you.
Juliana, I heard your voice when I asked if anyone wants to answer. Do you want to say something?
Yes. So again, I can't speak for Zambia or Africa, but I think I can speak a little bit for Cross Borders. You know, and a very current case study is I've been looking for a specific like blockchain gambling company and they've been in the business of SEC regulation, so many looming problems. And to your point of asking for forgiveness rather than permission is like you mentioned, a very tricky thing. But I think it depends on if you're trying to solve the very specific problem of allowing, you know, people to crowdfund globally or what that looks like. And I think there's a couple ways that you can specifically go about this. One, what I've seen a lot of these companies do that are trying to not say skirt regulation, especially to his point, you know, no one has a problem with blockchain, but a lot of people have, what people have problems with is when money is transferring and they're not getting any piece of it, especially with governments, right? And that's when they want a piece of it and they want to regulate it. And so what I've seen a lot of individuals to try to do is to test their model without doing any like physical exchange, you know, of currency, for them to test with tokens, for them to test with very alternative methods of, you know, points of doing this and doing this. And while they're building the traction, if there's significant traction, then sort of worrying about the regulation a little bit after, because regulators are much more willing to work with people when there's an abundance of people that are being helped, right? If they realize, oh, this is actually a solution for the problem that's at hand and it's helping the local community and the local government and whatever, then they're more willing to help. So there's definitely different ways, but I'd say like climb the staircase of like testing, but like maybe think about regulation, test more, test further, get a larger user base, and then start working with regulators to help is my best answer to that. Some people disagree with me.
There's a case in Vietnam where the founder went for remittance. You know, no government is going to say, no, we don't want inbound remittances. And so they just, you know, started with that and they've been very successful.
Ryan, I saw you saying something on the chat. Can you elaborate?
I was just mentioning that there's a really brilliant Israeli startup that has kind of really cracked this model around crowdfunding and targeting international crowdfunding for equity and targeting international audiences. And I think, you know, obviously Israel is a very kind of regulatory mature market. And the conditions are very different there. But, you know, I guess my advice to you would be, you know, work with the regulator from the outset, you know, bring them into the fold, you know, co-develop, you know, make them feel like they are part of the solution, have contributed to the solution. And, you know, another really good piece of advice is, you know, if you are willing to play in the gray area, which, you know, ultimately is what things are right now, you know, under regulation is just as dangerous as over regulation because you don't know where things are going. You know, there is always that notion of how quickly can you get big enough that you're too big to fail. You know, when you become an integral part of an economy or a market where regulators can't switch you off, and I think that's something also really important to think about.
Thank you, Ryan. And Francis, you raised hand. What do you want to add some last words before we close the panel discussion?
Yeah, just to kind of advise to the guy. Maybe for Tanzania, we have like, you know, a bank has kind of launched like a sandbox for fintechs. So you could actually be able to build upon that. And you don't have to kind of deal with the regulators directly. But once you are in the sandbox for the bank, it becomes very easy to test out blockchain solutions, fintechs, and whatnot. So I think like what Ryan was saying, it's very important to go through, like, you know, engage. What we do in Tanzania is kind of, you engage with regulators from the beginning, from the onset. They might not understand what you're trying to build, but they feel kind of confident that you are with them and you are able to report to them how things are going. So what we've done with one of our startups is that they are building something that probably there's no current policy or regulatory framework for that. So what the regulator said was, we're going to give you a small space to test this, and you give us like, monthly, quarterly reports in terms of how is it going. So they want to look at security, they want to look at where you're hosting your data and most of these things. So that also kind of gives like the regulators like confidence that they are part of the process, and you could actually kind of help them to be able to start thinking through how they can actually to build a framework, regulatory framework around that. So it's asking for forgiveness and sometimes can be very expensive. So it's important that you go with them from the beginning and you take them through the journey, and they can actually work with you through the process, and from there they can actually be able to now create maybe a framework or a policy that will guide what you are building, and that could make it easier for anyone coming after you. So that's like my 1 cent to the guy.
1 cent, not two. Ryan, I see that you say, and you have some line as well. What were you saying? We cannot see the full line of your message.
Oh, it's just I was just saying, as a very practical piece of advice is at an early stage as possible, try and find someone that you can bring in, whether they're at a board level or at an advisor level, who has political power and connection into regulatory bodies, so that they can open those doors, get you a seat at the table, get you the right kind of audience, and almost act as an advocate for what you're trying to achieve at the highest level, whether it be at central bank level, whatever it may be.
Thank you, Ryan. And Juliana, you also said something else.
Yeah, I think for the most part, as Francis was saying, that, regulation can, or excuse me, asking for forgiveness can be expensive, but regulation can also be super expensive, and trying to do loopholes, and ultimately it could kill you really before you even get started. So choose your better evil, be smart about it, get opinions and advice. If it's super illegal, don't do it. But if it's gray area, again, there's a lot of room for forgiveness. And yeah, and personally, I'm never a fan of regulation. So grow big, grow fast, and yeah, get your market share.
Thank you, Juliana, for closing out panel discussion. So now we will have 10 minutes of break before we get to the pitching session. And the structure of the pitching session would be, there will be 6 startups, 3 minutes pitch per startups, and 7 minutes for Q&A from the judges and from the audience. So yeah, 10 minutes of break, everyone.
Thank you.